Right, I've pressed the recording on, so we'll record our lecture for today. My name is Zafar. I'm going to be talking about the business environment, LO4 today, to understand the nature of the national environment in which organizations operate. Okay, welcome Sumit to another class. So what we will be covering in today's lecture is a lot of stuff here. We're going to be talking about entrepreneurship. We're going to be talking about the types of entrepreneurship, the importance of national entrepreneurship strategy, the role of monetary and fiscal policy in government planning and we're going to be talking about the regulatory mechanisms in the country. So this is what we're going to be talking about, the indicative context. So let's start with the first thing. What is entrepreneurship? Okay, any idea what's entrepreneurship? I mean, you are an entrepreneur.
A little bit, sir.
Okay, go on, tell
when
us.
we design or launch some new thing, just for example, we get a pen and we take a pen and sell them, is known as entrepreneurship.
Okay, sell. So I mean,
no, just first we have to design, then launch, and then having some marketing.
Right.
Okay. And start from a very start, then move towards a huge business. Is known as
okay. I get you. So the entrepreneurship is just starting a business, isn't it? It's starting a small a business, and it becomes big. So how the entrepreneurship is the process of designing, launching, and running a new business. In other words, okay, how do you design the business, or when you come and launch it, do it marketing and running the business, publicity and marketing, and doing sales and generating some businesses, sales leads, and so on and so forth. So that's employing people, right? All this is to do with entrepreneurship. Okay. So the entrepreneurship is the process of designing, launching, and running a new business, which is often initially a small business. And the people who create these businesses are called entrepreneurs. So people like yourself who are creating, who are running a business, small business or medium-sized business, you're called entrepreneurs. People who put the resources, who put their capital, who put their management and labor all together. That's known as the four functions of labor production, which is called the cost of, which is called the four functions of production: land, labor, materials, and entrepreneurship. So the entrepreneurship is a person who gets all these factors of production together and creates a business for himself and runs it. Okay, so the concept of entrepreneurship is very important in an economy, because the main idea of creating entrepreneurship is to make a profit. And the most obvious example of creating a small entrepreneurship is starting a small business, anything, barber shop or a cafe shop or a tailor shop, whatever it is. Okay, so we always start with a small, and then we grow big. And okay, there are different types of entrepreneurship. From they're called small businesses, scalable startup, large companies, social enterprises, social entrepreneurs, and they all engaged in entrepreneurship. Okay, so this is what we are going to be talking about. So the 4.1, looking at your assessment criteria, the first, there are 3 or 4 assessment criteria in your assignment. We will be discussing now. Look at the importance of national entrepreneurship strategy. So first, 4.1 is to explain the importance of national entrepreneurship strategy. Now, this strategy is, what we mean by strategy is a long-term plan. Okay, a plan by the government, for example, because we're talking about the national entrepreneurship strategy. So it's a plan by the government, how they're going to look into the entrepreneurship. How do they encourage small businesses to become businesses? How do they encourage people to become entrepreneurs? Okay, so in the UK, in this 98% of entrepreneurships or small businesses, it's a big business in the UK, so that the government wants people to go into the self-employment, and 98% of private sector businesses are owned by small business people. They are known as small entrepreneurs. They are known as the small startup founders with a lot of different ideas, and they contribute a lot of revenue to the UK economy. Okay, so SME is a term which is hugely used in entrepreneurship, small, medium, and enterprises. Right, this term is used in economics and entrepreneurships to distinguish entrepreneurship and businesses, and it's very important. Business, there are a lot of people who are employed within this SME business entrepreneurship. About 16 million people in the UK are employed or working towards the self-employment, and this generates a lot of growth in the economy because the entrepreneurship is very much generate a lot of revenue for the UK. About 1.9 trillion pound they contribute to the UK economy every year. So it's a huge, huge, revenue they are generating. A lot of people who are self-employed, who are earning for themselves, who are working as self-employed people, they generate about 1.9 million or trillion pound each year, about 2 trillion pound each year approximately. So that you can see a correlation between this type of a sector generating a lot of money to the economy. So you can see the correlation between a sector and the economy, how much it will generate. This tells you about the health and wealth of the small businesses. It affects directly the government because they want to plan, they want to make sure that they sustain this type of growth. And there are benefits of this because it gives a lot of contribution to the economy. Okay, people who are yes. So the SME business is quite healthy business. These people contribute a lot of money to the economy. They provide a lot of employment opportunities. They provide a lot of revenue. They provide a strategy for the government. They provide sustainability. They provide new ideas. So entrepreneurship is very, very important. It's kind of like a backbone of the economy. If there were not small businesses, then economy, of course, will suffer because not every economy the government can afford to put large businesses in. So therefore, it's the entrepreneurship is very much economic growth driven. Okay, it provides these people like yourselves who are entrepreneurs. They provide innovation. They provide economic growth to the area. They provide a revenue for the government. They provide an idea to the government as policy, to provide some policymakers, to provide some ideology in innovation. And it's very important that is sustained. There should be a strategy. So our LO2, which is here at the top of the first page, which is the understand the nature of the national environment in which organizations operate, and it's to do with the strategy is to do with the entrepreneurship. So this is a very important factor when we are considering the entrepreneurship. Okay. So the importance of national entrepreneurship is very important. So the government must take account of this. Office of National Statistics provides a lot of data, provides a lot of input, provides a lot of information as to what is the contribution of this area. Okay, so if you need any figures, you go to the National Office of National Statistics. You can see the contributions that these people, entrepreneurs, provide. Okay, how did these concept? How did this concept of enterprise or entrepreneurship start? It started back in early days. It started in back in the 20th century, or when people wanted to do their own business, when people wanted to do the economic development, because economic development wasn't gearing up. So the enterprise or private people took some kind of economic lead into it. Therefore, they fueled they wanted to make sure that the country gets some kind of business towards employment, because there wasn't much because manufacturing was declining and there wasn't any service sector as such. So the entrepreneurship arose in the arena. It arose in the Western Europe. It arose in the United States, and so to make sure that the people involved with the business, with the entrepreneurships, become stronger and stronger. Okay, so it started in the earlier 20th century because the other industry was declining. So the few people who were rich at the time thought it's a good idea. Let's start some entrepreneurship of our own to provide growth in the economy. Okay. In the 70s, this trend continued to become larger and larger business. People became self-employed. People tried to get high paying managerial jobs within themselves, and they tried to introduce large jobs within themselves sector. So this is growth. They started growing in the 70s as well. Okay. For developing countries, the most of the entrepreneurship is geared by the government, because they are the people who stimulate economic growth, because it's poor people can't start much because they don't have capital, they don't have training, they don't have any know-how, they don't know about the economies of scale, they don't have capital, equipment, and so on. So the government takes a lead in the developing entrepreneurships, as in Pakistan or India or other developing countries. The government tries and push small business management or small business entrepreneurship. Okay, so to create a balanced approach to nurturing big businesses and smaller businesses, so that they create inventions, so to create a platform whereby the companies can provide some growth to the economy. Okay, and business owners can make or help make policies in the developing countries, because they can create a positive relationship between economics and society. Okay, so in the developing country, is very much the entrepreneurship is very much government led to provide this basic needs and requirements of. Okay, so 4.1, basically what we quickly discussed is 4.1 here. Okay, it asks you to explain the importance. So what we discussed is the importance of the entrepreneurship strategy. Why is it important? The reasons for entrepreneurship, and the contribution that the government gives to the entrepreneurship strategy. So we said the entrepreneurship is very important because it contributes a lot of revenue to the economy. In the UK, it contributes about £2 trillion per year by these small businesses. They are important for the economy because they provide employment, they provide revenue, they provide a relationship, national growth system, and they are very important in providing ideas to the government, innovation, and ideas to the government in the sense of new ideas, new policies, and new avenues of doing businesses. A lot of people are employed in this business, because about 16-17 million people are associated with this type of entrepreneurship business. So it's very important. And how did it start? It started in Europe. It started in America. It started in early 20th century. Okay, because there wasn't much manufacturing industry. There wasn't much service industry. So people got together, or people in the entrepreneurs, few people, as you call them in those days, few entrepreneurs got together, and they got the idea to start this entrepreneurship. These people worked, and back in the early 70s, right, the economies became more towards the self-employment, because people are more aware of these, and they created a lot of jobs for the businesses. So this is a very important concept. It started taking place in early 70s as well. Okay, for developing countries, a lot of people, they are associated with them because the government provides a lot of knowledge, they provide a lot of training, they provide a lot of capital. Similarly, in the developing countries, government is trying to help get this across because it's important for the national economy. So these are the main reasons about the entrepreneurship. Okay. Now, next we need to look at the role of the policies the government creates in order to have an impact on organizations and their activities. So we are talking about two types of policies when we are saying the type of policies that the government introduces into the economy. There are two types of policies. One's called the monetary policy and the other one's called fiscal policy. The monetary policy involves changes in money supply, changes in the interest rate, changes in the credit exchange rate, and that kind of policy affects the economic objectives in that country. Okay, so when we are talking about the monetary policy, it's mainly focused on the supply of money. It's mainly focused on the interest rates. It's mainly focused on the exchange rates. Okay, and it involves how these factors influence the economy in that particular country. Okay, so this is the one policy that that we're going to be talking about, the monetary policy. And this monetary policy is controlled by the central bank of any country. In the UK, the Bank of England is the institution that controls the money, that does prepare the monetary policy. It advises the government how to prepare, how to write a policy, and then it implements the policy to stimulate economic growth, to curb inflation, to create employment, to create other types of affects other supplies and so on, to make other decisions. So the mainly monetary policy is controlled by the Bank of England, implemented by the policy makers from the Parliament through the government. Okay. Second type of policy is known as the fiscal policy, which is about taxation, which is drafted and publicized by the government itself. The main objectives of the fiscal policy is to do with the taxation. Okay, taxing, the government uses the tax as an instrument of fiscal policy. They use they design the policy on how much the government wants to spend, how much the government wants to borrow. This is to do mainly with the budget. Okay, so every year we have a budget in the UK, and in other countries they have also a budget. A budget is where they plan, the government plans, they set out their targets, how much they want to get the taxation going, how much the revenue they're going to generate through taxation, where they're going to spend, and what's their policy. So the main fiscal policy is used by the government to control certain factors in the economy. Okay, so this is very important. Fiscal policy is controls the government spending. It looks at taxation, it looks at the borrowing, and it looks at the economic activity. Fiscal policy affects the growth of a country. It looks at aggregate demand, employment, output. Fiscal policy looks at how the government can control the spendings. Okay, it looks at the redistribution of income and wealth, how the government intends to redistribute its income, what are the correct measures for public goods, what are the measures that the government is going to take on aggregating demand, or the changes in the aggregate demand, and what type of policies is going to use or implement on creating or affecting its GDP. So the main purpose of the fiscal policy is to do with the taxation. Okay.
Okay.
So we said the two types of policies the government uses to have an impact on organizations. They can use number one, monetary policy, and they can use number two, which is the fiscal policy. So let's look at the details. Okay, let's look at the what is what is the fiscal policy? Why does the government tax? Okay, so the first thing we want to make sure that you understand the government taxes the country. Or why does it tax the country, or why does it tax the people who are working or people who are self-employed or employed? The government wants to tax them because to collect revenue and because they want to create demand. They want to stimulate inflation, or they want to control the inflation. They want to have economic growth. They want to redistribute the income. They want to make sure that people have equal amount of money in income and the expenditure. Okay, the government wants to tax people because to correct the externalities, i.e. the market failure. Okay, so it's very important that the government collects these revenue to spend throughout their country to stimulate demand. Okay, so it's that's why there are different types of taxation, right? There are different types of taxation where the government gets the money from. They can collect the taxes from a direct tax or indirect tax, or they have a progressive tax, regressive tax, proportional tax. They have government flat marginal tax, for example. So taxation is direct taxation is where you or the government taxes us, for example, on our income. This is known as the direct taxation. Okay, or it taxes people's regular monthly income or wealth or on profit. So the companies get their taxes through their profits. So the government can tax them by corporation tax, and the government can tax people individually by their income tax. The government includes these income tax. So this is known as the direct tax. Okay, corporation tax, capital gains tax, national insurance contributions, and income tax. Okay, so this direct taxation includes our income tax, whatever we earn. However, we can a person can get a tax-free salary of 12,750. Okay, then you start paying after anything over and above. Person gets over and above 12,750 allowance, which is called the tax-free salary or personal allowance. Okay, after that, whatever you earn, you are either paid at 20%, you're paying tax, or at 40% or 50%. Now, most of the people pay 20% tax. Then if their income is above 50,000 pounds, then they start paying higher tax. Okay, people who are earning a high amount of income, they pay higher amount of tax, 40%, 50%. But usually most people pay 20% because their income is less than 40,000. Okay, so this is known as the income tax on. Then you have to pay national insurance contribution, i.e. the contribution that goes towards, for example, schooling or hospitalization. Okay, or on other things. Then another form of income tax, another form of direct tax, is the capital gains tax, which is levied on properties, buying and selling property, or you inherit property and then you sell it. So that's prone to capital gains tax because it rises in value. Then there's a corporation tax, which is paid by the organizations on their earnings. Okay. Now this direct taxation, you can't shift it. because people are, automatically brought into the tax net. The burden of tax net cannot be shifted. Okay, and for the past 20 years, Britain has seen a shift towards indirect taxation, i.e. indirect taxation means taxation on, for example, services. The government put a lot of tax on goods and services in, when you go and out eat in a restaurant, then you are taxed on the service that you receive. Okay, so maybe you go on holidays, you're put on a tax on the holidays, or when you go and book a hotel, for example, you pay for the hotel booking charges and service charges. Okay, so these are called the indirect taxation, or the taxation that's not related to your income, but indirectly the government collects it through the VAT, value-added tax, i.e. the excise duty put on cigarettes, for example, or petrol, or car or alcohol. The car taxation we pay every year, or people who are buying cigarettes or alcohol or other things, they pay VAT. Or other goods and services, all are paid. They all pay VAT, for example, except the food. You don't pay any VAT on food stuff, but you pay VAT on other items of goods and services you buy from the shops. You have to pay. So, for example, if you are wanting to repair your house and it costs you £1,000, 20% on top of the house repairs, you have to pay a VAT, value-added tax, provided the person who's charging you VAT is registered with the Inland Revenue, with the tax authorities. Otherwise, they can't charge VAT, and they have to pay the VAT to the government. Okay, so it will cost you £1,200 instead of £1,000 repair cost. Okay, so that's value-added tax. Okay, and value-added tax is paid on all items except certain items like books or food and clothing, for example. Okay, most of these indirect taxes are put on goods and services that are increasing the demand, because they know that these will not decrease in demand. People will go and buy them. Okay, so the burden of indirect taxation, okay, is a type of thing which is passed on to the consumer. So the government puts a tax on the item, on a particular item, but the service charges is paid by the consumer, and the consumer pays to the collector. The collector gives the VAT money to the Inland Revenue, and they put it in their kitty. They put it in their collection. Okay, so this is how they will collect. The direct taxation is taken from the person before they see their profit, before they see their salary. The government takes it from them. Okay, the direct taxation is collected after the products have been sold and collected from the consumer. Okay, so this burden of taxation depends on the type of goods and services. For example, it's put on the goods and services that are what you call the elasticity of demand and supply, i.e. the product that are very much inelastic in the sense that their demand will not be affected even if the taxation goes up and up and up. You don't see a decline in their demand or in supply. So, for example, when the tax is put up on petrol, people will still keep on buying these type of goods because they need it. They need the petrol for their car. They need to put the petrol in their motorcycles, buses, and cars. Okay, so the demand of that product will still go on increasing rather than declining. So this is why they put the tax on the goods that are inelastic. Okay, And this is, of course, they put the goods on services, in elastic demand, like also like alcohol and like fuel and like necessities. So this will go on and on. Some of these taxation is proportional, some of them are regressive, and some of the taxation is progressive. So progressive tax, so let's discuss progressive tax is when the percentage of tax rises as income rises. So the, when we're talking about the progressive tax, we are talking about the tax percentage of tax rises as your income rises. Okay, a regressive tax, which is declines as your income rises. Okay, with the regress, the percentage of tax falls as your income rises. Okay, with the progressive tax, your tax increases as your income increases. Okay, so most of the taxes in the UK, come from excise duties, comes from VAT. In the UK, most of these regressive taxes, they come from the VAT duties on alcohol and drinks and petrol and so on. Okay, so that's very important to know. Okay, proportional tax is a tax that is a percentage of tax where it stays constant. So for example, you might have an income which is applied at 25%, and all the rest is increases with the rise in income. Okay, so so for example, proportional tax is when the certain percentage of tax rises is constant. We might have an income tax system that applied at a standard rate of 25% across all income levels. You put a proportion of that tax after. Okay, so we have three types of tax. Number one is progressive tax, regressive tax, and proportional tax. Proportional tax is where the percentage of tax rises in a constant manner. Okay, and so a standard tax is applied after that to the tax income. Okay, so this is very important to know. How does the next thing is we need to know, how does the government spend? How does where's the collection? How does the government spend? Where does it spend all these taxes? And why does it spend? Now, the government, using the fiscal policy, collects the amount of taxes from the public and business, and they spend by preparing a budget. Okay, they spend on different types of items. Number one, they spend on capital expenditure, capital spending, like, for example, new roads. They'll spend on hospitals. They'll spend on building new prisons, right? Okay, they spend on schools. They can spend on government buildings, right? So this is known as the government spending or capital spending, or they're buying the equipment, for example, for these hospitals or for these schools or for these prisons, and computer equipment or lighting, for example, on these roads, right? So this is known as the capital expenditure, which is bought through through this income. Then the other item they spend is on education and has hospitals. They spend on providing medicines and operation costs and books, for example, in schools and laboratories, and salaries and so on. Okay, so the government spends on in health and education system. Okay, this is different to the capital spending. Now, you must distinguish capital spending is for a longer term use, i.e. the buildings and the equipment. All right, the current government spending means the current running expenditure. Okay, the salaries, for example, or the services, right, or a kind of training materials, or kind of doctors uniforms, for example, or doctors training and doctors materials, the current government spending. Okay, and then the third item they spend money is on transfer payments. That's on the state pensions, social security, job seekers allowance, for example. They spend money on pensions, they spend money on welfare payments. Do you understand, Sumit?
Yes, sir.
You're listening? Okay, so
Yes, sir.
this is where the government spends. So they collect the money from direct taxation or indirect taxation, and they spend on this, on public services, public expenditure. They spend on what you call them, on the welfare system, okay, state pensions and so on. Okay, why does the government spend on these services? What do they get out of it? They get out of this spending is, number one, it allows the government to transfer, they want to transfer or redistribute income from the rich to the poor. Okay, so it will create a kind of a equality between the national society. It creates a kind of a equal distribution of income. Okay, so that's why they tax people. Excuse me. Okay, that's why they tax people. So to redistribute income, they take it from the rich and they give it to the poorer people, so to enjoy. Okay, it allows the government to buy goods, public goods, so the public can enjoy these goods and services which they can't enjoy themselves. So, for example, public can't, make roads, for example. They don't have the capability of providing or creating or implementing road infrastructure. So the government plans and makes these roads to be accessible to the general public. Okay, so provision of, in other words, provision of public goods, hospitals, and provision of schools, and provision of roads and infrastructure and lighting, all this type of thing. Okay, thirdly, it provides welfare support, people who are on low income, people who are unemployed, people who are on sick, people who are disabled, people who can't work. The government provides them a kind of a support so that they can survive, so they can live and they can enjoy, as well as they spend money on housing. So they rehouse the unemployed people or people who are on low incomes. They provide them hospitalization, they provide them medicines. So this government spends on this. They provide them on schools. Okay, so the government also, the government spends money to create or inflate or stimulate demand, which is another way of boosting the economy. Because if you spend more into the economy, then people will buy more goods and services, then they will generate more production, and the economy will be going into good employment figures. So this is part of the government's planning. This is part of the government policy to create demand in the economy, to lead growth in the economy, to create a lot of national income and so on. Okay, so there are, and also it's a government policy toward their election. For example, if they want to spend more money onto the in the economy, then they'll have more voting for themselves, and they'll probably win the next election and so on. All right. So there are many other reasons why the government spends money into the economy, and also they spend it to get a good reputation. They'll probably get a welcome from the other national or international institutions that the government is good, because they are spending money on the welfare of the economy and the public. Okay, so these are some of the many reasons why the government want to spend to create. Also, they want to create a budget cycle, and they want to make sure that the economy stays good in a business cycle. They want to make sure the government stays on top of the budget process. Okay, Now, what is a budget? It's a budget, of course, spending, I just told you, it's a spending plan. Okay, budget is a financial plan whereby the government gets the money and spends money, and what's left and what's not left. Okay, so it's a budget, it's a process, it's a planning, it's a planning for the next year or the year afterwards. Okay, it gives them control, it gives them financial control over the country, and whatever they budgeted, whatever the government budgeted, and the difference between the budget and the difference between the budget and the government gets it from other sources. So any shortfall from the budget to this actual performance, they get it through the indirect taxation and or any variances they make up. Okay.
Okay.
Right. So the budget is very important. So the budget, sometimes it goes into deficit and sometimes it goes into plus, i.e. the budget either can go into negative figure or it can go into positive figures. When it goes into negative figures, it's known as the budget deficit. When it goes into the positive figure, when it goes into the positive figure, it goes into the black. In other words, it's surplus. Okay, so the budget deficit is in negative form or less than less money left or no money left, or it's in the minus figure because the government has spent more than it's collected in revenue. If it's other way around, i.e. the budget surplus, then the government is collecting more budget and spending less. Okay, so the spending, do you understand? Yeah,
yes,
so the government is spending less than it's collecting, so it goes into the surplus or budget deficit. So this is why in order to balance these books, the government creates all these figures. They create all this budget for the year and for the so to make sure its spending is not overspent. Otherwise, if it spends more than it's collected, then it needs to borrow money from the banks. It goes to the International Monetary Fund, for example, when nobody funds. This is how we going to goes into more problems, more economic issues, more economic problems because the budget is not in surplus. So the government doesn't have the money to fund its expenditure. It goes outside to the bank and to the people and to the monetary fund and to the World Bank, and they put some conditions onto the government to recover, and creates a lot of issues on the economy, which is happening currently in our Pakistan. Yeah.
Yes, sir.
This is why we go into debt, because there are not a lot of exports. There are more imports. There are more more expenditure than the collection of taxes. So the government borrows money, and nobody wants to give the money to anybody without strict conditions. So if you want to borrow money from a bank, they will have to put money to you, provided you satisfy many conditions. Okay, and if you can't satisfy any of those conditions, then they will not give you money. Right? So as yourself, you know that you are a businessman, and if you want to borrow money from the bank, the bank want security, the bank want insurances, the bank want to make sure that whatever the money they give you is returnable within a particular time, within a particular period. Okay, and that you're not going to be running away and you can't afford to not to pay. So they want security some kind. This similarly, when a government cannot afford to have a more collection, they go to outside agencies. They want assurances whether the government is going to be able to pay them back or not. Okay, so the business cycle is affected, the government figures are affected, the economic growth is affected, right? The economic plan is affected. This is why we have to create a strategy in order for us to make sure that our strategy is working over the long term. And one of those strategies is to plan about the business cycles, the growth economy, the employment, the boom and the recession, and the GDP, which is the gross domestic product from one year to the next and so on. Okay, so we want to make sure that the government plans because they want to have a good GDP for the country, so the country grows. So this is very important. Okay, so the budget affects the business plan. The budget affects the business cycle. How does it affect? As I told you, if the government doesn't collect more money than it spends, then it has a problem, the budget deficit, and it has to borrow money from their less, because the people are not trusting the government. Agencies are not trusting the government. Business confidence is low investment. There's low demand in the economy. There's low investment coming into the economy. There's a lot of unemployment, okay, and unrest and so on. So there are many problems in the country, okay. Benefits of a budget deficit is budgets. It gives you some kind of if the government wants to put money into the economy, they borrow money, and then it'll create a lot of economic growth, in other words, okay. But it has to satisfy the other conditions. Okay, I'm going to, okay. Now let's look at the monetary policy. Monetary policy, as we said earlier on. So we talked about the many aspects of the fiscal policy, and monetary policy now, number 2, is linked to the monetary policy of the government, or policy of the Bank of England or Bank of Pakistan or any other central bank, which is very important. They look at how much is the exchange rate, how much money is there in the country, how much money is there in the shape of notes and currency format, and what's the effect of this money on the national economy and the evaluation of monetary policy. So the monetary policy looks at the how much the available credit is. It this exchange rate good or bad? Is it rising or stable or falling? And what are the interest rates? So the more interest rate expensive, then it's bad for the economy. The higher the interest rate, as in the UK, there are high interest rates, which is not good for the economy. So the economy also cannot grow, because if there's a lot of high interest rate, it's expensive to borrow. So people are not going to borrow a lot of money because they cannot pay back. And therefore, the demand gets affected, the output gets affected, what you call the trust or the confidence gets infected. Therefore, it's very important that the interest rate stays stable, because people want to borrow money, because people want to plan, because people want to spend, because the consumer confidence has to stay. And also the foreign investment comes depending on the borrowing. In other words, the borrowing, the people who want to borrow money for export and for imports. It's very important that these interest rates stay stable, exchange rates stay stable, to create and stimulate demand. Okay, and how does this how is this affected? Is affected by the policies of the government, or by the policy of the Bank of England, which is a central bank of the government, who advises the government to do this, and that. Okay, so a Bank of England in England, in the UK, is the central bank, advises the government to create monetary policy to control money. The bank that issues notes. It's a bank that controls the government's policies on banking, and it controls the commercial banks. It advises the government on setting interest rates and how to balance the price and output objectives. Okay, and it creates it creates demand. It stops demand, or it stops demand by making these policy work or not policy work. Okay, so it's very important. The interest rate or the monetary policy is very important in order for the government to create issues or create demand in the economy. Okay, and mainly done by the Bank of England. So let's have a look. It's important to do that. Okay, so what we're saying, is the government, in order to create this entrepreneurship, they do this by two policies, which is fiscal and monetary policy. That will affect their policies in the country, and that will affect the entrepreneurship. Okay. Are we okay so far? So what we looked at 4.1, 4.2 in detail. Now we're going to look at the last of the section. We lost of the factors, which is 4.3, is what is the impact of these policies, and how does the regulatory mechanism work in particular country or in particular organization, or what are the regulatory framework in the UK, for example. Okay, so these policies are very good, but there is some kind of a regulatory framework which is able to control these, how they are implemented, and how the policies will work, and what's their evaluation, what's the result, whether they are effective, whether they are not effective. So there is some kind of a regulatory framework in the UK, in the Europe, and in other parts of the world that are looking after. So one type of regulatory mechanism is competition policy, right? Which controls the dynamic efficiency of markets, price mechanism, price competition. It looks at the safeguards and interest promotes the interest of consumers through choice and lower price levels. So the competition policy is very important. Market cartels. Okay, the other type of mechanism is looking at the cartel system, the cartel or antitrust regulators. They look after the agreements that are made between people, between competitors, between organizations on price fixing and other abuses by the firms, because they are dominant in a dominant share of the market. So therefore there is some kind of commissions or cartels. The government makes sure that these cartels are controlled. Okay, then you have a state control on different types of mergers. How the government controls mergers, how the government control market liberalization, how there are some kind of mechanisms. There are regulators who control these monopolies. There are regulators who are controlling competition. Okay, so there are a lot of mechanisms the government puts onto these entrepreneurs, onto these entrepreneurial people, so that they don't abuse the system. Okay, their main role of these regulators, for example, one of these regulators is also the Competition and Market Authority, or European Competition Commission. Okay, their role is to control, their role is to look after, their role is to look at how a market works, and the outcomes that the result for producers and consumers. The Competition Authority looks at the competition policy. It looks at deregulation. It looks at preventing mergers. It looks at making laws to introduce competition into other industries. It looks at, for example, acquisitions that create a monopoly. It looks at forced sales of assets, for example. So these competition, European Competition Commission looks at different competition policy in action. It looks particularly at deregulation, okay, i.e. the law to reduce monopoly power, deregulating policy. So this is one of the regulators, okay. Then the other, the function of these regulators, Monopolies Commission, for example, Mergers Commission, Monopoly Mergers Commission, for example, looks at, competition, or reducing competition, or anti-competition, or it looks at reducing imports control, or commission, or looks at their power, and looks at their, making sure that these are not abusing their powers, okay. or it has other functions like, for example, in allowing other countries into the market to increase market share, for example, or decrease market share, or import and export tariffs, and so on and so forth. So it looks at many things. So these commissions, these policy regulators look at overall regulation of these commission. We have a monopolies and commission, cartel commission, for example, banking commission. You have mergers commission, and you have other regulators, for example, gas regulators and telephone regulators. So they also monitor the markets and make sure that these people are not using their power. Okay, now you can go for a distinction in when you complete your assignment. You can look at the different businesses operating in different economic situations, in different economic environments. You can go for a merit or distinction. Most likely, if you go for a distinction rather than a pass, you need to look at the compare and contrasting the benefits and challenges to specific businesses operating in particular or economic environment, and tell us how they function, what are the similarities, what are the dissimilarities, what are the benefits, what are the issues on particular examples of particular businesses. For example, if you are a technology company, how does the globalization, for example, affects a country like a company like technology company? How does it affect its is it easier for you to transfer goods? Is it easier for you to employ people? Is it easier for a company to break borders and so on and so forth? Okay, so the globalization or the impact of globalization on this particular industry, and or you can compare different companies or different organizations to make sure that you are covering this problem issue of economic growth and market opportunity. Okay, what is what is there? For example, how does the measures calculated? How does the measure of GNP calculated? How is the GDP percentage affecting these organizations and so forth? So if you want to claim a little bit higher grade, you have to compare and contrast the benefits and challenges to a specific business opportunity. So you need to describe the kind of organization, what are the benefits of this particular policy, or what are the challenges toward this policy, and maybe give your own decision afterwards so if you want to claim. So this is all about your role, about your decision, about your example, and then you are the person who is going to decide. So you can look at the benefits and disadvantages of globalization for business if you need to, with examples, of course. Okay.
Okay.
Ethical issues and so on. Okay, organizational structure, ethical issues, leadership problems, legal problems, legal structures. Look at these with the infrastructures and how does the effect of boundaryless organizations benefit and challenges with the organization. Okay, so we've covered a lot of material in a small amount of time. We going back to our learning aim or learning outcome, we intended to cover the nature of national environment in which organizations operate. We looked at different types of factors affecting entrepreneurship. We started off what is entrepreneurship. We looked at the types of entrepreneurship, and we looked at the role of monetary policy. We looked at the fiscal policy in detail, and we looked at the regulatory framework or regulatory mechanisms that are implementing. And lastly, we looked at challenges and benefits of globalization to these organizations or these entrepreneurs affecting business economies or affecting the entrepreneurship in. Okay, so we've covered a lot of material, and when you look at your assignment, this will all be relevant, and you should be able to answer them very comfortably. I'm sure that you can go for a higher grade just to pass than just a pass itself. Okay.
Okay.
Any questions, any issues, any problems, or anything that you want to add, or anything that you didn't understand, or maybe am I going over fast, or you didn't understand me anything?
No, sir, everything was clear.
Did you, everything is fine?
Yes, sir.
Okay, no questions?
No, sir.
All right, okay, thank you very much. Appreciate that. Okay, so what I'll do, I'll just put a stop on the recording. And if you have any question that you do not want me to record, then I'll won't record it. Okay, thank you very much. Have a good day. Bye.
Thank you.
Okay.